Let's talk about something most traders never look at. This week, Bitcoin kept getting rejected at almost the same price. It wasn't a trend line, it wasn't RSI, it was the wall of sell orders sitting right above price. Today I'll show you how to see it, this red and green pressure map, and then I'll put real money on it. Live. This is my own money, not financial advice. Let's get into it. Here's the tool and it's free. This is the order book pressure map on Coinglass. The red band above the price is resting sell orders. The higher and darker the red, the bigger the wall of sellers waiting there. The green band below price is resting buy orders. You're literally seeing supply and demand stacked up in color. When the red wall above is way thicker than the green below, sellers are in control and price usually drops. Now the numbers. Set the depth to about 5% around price, then compare the red against the green. When the sell side is roughly 2.5 times heavier than the buy side, I start watching for a short. 4 times, that's my high confidence zone. On this map, you can just see it. When the top goes deep, solid red, and the bottom is thin green, that's your signal. And the one rule I never break, no imbalance, no trade. So what happens next? When the sell wall above is this much heavier than the buys below, price usually gets pushed down toward the green zone. That thick red acts like a ceiling. Every bounce into it gets sold off. So my read here is simple. Lower toward the green band unless that red wall suddenly thins out. Now, where do you actually enter? You don't just short into empty space. You wait for price to rally up into the red wall, install, or get rejected. That's your entry. You short right there. Your stop loss goes just above the red wall. Because if price eats through it, your read was wrong. Target is the green buy zone below. Tight stop, clear target, that's the whole trade. You don't need anything expensive. This pressure map is free, no login. Watch the spot pressure, set your ratio threshold so it only highlights real imbalances. When the red wall stacks up at your level, you don't blindly short. You wait for price to actually stall there, then enter with a tight stop. Watch first, then act. Last week, Bitcoin hit 74,000 with a red wall 3 times the green. That short paid off clean.